Welcome to the deep dive. Today, we're really digging into Bitcoin for September 2025. We sorted through a ton of analyses, reports, forecasts, all that noise.
Yeah, cutting through it.
Exactly. To give you a clear, concise picture for the month ahead, our mission. To arm you with the crucial insights, those key price levels, and, the potential triggers shaping Bitcoin's path.
So you feel well-informed, ready to navigate things. We're basically boiling down the vital info from a whole stack of sources.
Not just what happened, but why it matters.
Precisely. For understanding this very dynamic asset.
Okay, so let's set the scene. To really get September, we need to see where Bitcoin's starting from. It kicked off the month hovering around, $108,000 to $111,000.
That's right. And that was straight after an August that saw a 6.5% dip.
Which was its first down month since April.
Yeah. And then you've got the whole historical thing hanging over it.
Red September. The ghost of September has passed.
Exactly. That month typically averages about a minus 3.7% return. It's like a calendar warning sign almost.
But here's where it gets interesting, right? What are you seeing that maybe pushes back against that history?
Well, what's fascinating here, and this is a key insight, I think, is that while history points down, the heavy selling we saw back in August, it might have actually sort of front-run that usual dip.
So the September slump maybe came early.
Could be. And crucially, despite all that negativity, we're seeing significant whale accumulation down at these recent lows. Big wallets are buying.
Okay.
Plus, there are these things called momentum divergences. Price goes down, but some underlying strength indicators are kind of ticking up. It hints, maybe a relief bounce later this month.
Gotcha. So history says down, but current activity.
Yeah.
Maybe not so fast. So the big question for everyone listening, where are the key battlegrounds in the price chart? Support levels first.
Right. So the sources are really highlighting strong support down there between $100,000 and $104,000.
And that's seen as a major floor.
Yeah, pretty much. It's a zone with lots of demand historically, high volume, and critically, it lines up with the 200-day moving average base. That's kind of the long-term trend backbone for many people.
Okay, so that $100K to $104K zone,
yeah,
that's for more patient strategic positioning?
Exactly, if you're looking medium term. Now, for maybe more tactical short-term plays, aiming for quicker bounces.
Yeah.
The $107,500 to $109,000 range, we've already seen some decent bounces off that level. So something to watch for quicker entries.
Okay, we've mapped the safety nets. Now let's look up. What about the ceilings? Where could a rally run into trouble? Profit-taking zones.
Good question. So immediate resistance and likely where some selling pressure might kick in on any rally is probably between $115,755.
That's the 50-day moving average, right?
Yep, the 50-day MA, a key short-term trend line, and then up to about $117,680, which is the average forecast for September from some analysts.
So that's the first hurdle zone?
That's the first hurdle. Beyond that, you've got a major cap, sort of reflecting the highs we saw over the summer, sitting around $120,000 to $125,000. Wow, okay.
That would really be an aggressive sales zone if, some unexpected good news sends prices flying that high.
Right. So beyond just the lines on the chart, what are the deeper market pulses? What are the underlying forces we should be watching this month?
Well, okay, September's history is definitely a big factor.
Right.
But the technicals, like the relative strength index, the RSI,
yeah,
it's looking pretty oversold.
Meaning it might have dropped too far too fast.
Potentially, yeah. Suggests room for at least a short-term bounce. And circling back to that really crucial point, the smart money, those big whale wallets,
yeah,
they're hitting record accumulation levels below $110,000. That's not just random buying. It feels like a strong signal they see value down here.
Interesting. Whales buying when history suggests selling.
And if you connect that to the bigger picture, fundamental triggers could flip the script really fast.
Like what?
Think maybe the Federal Reserve sounding more dovish, signaling easier money. That usually helps risk assets like Bitcoin. Or maybe the US dollar weakens, making Bitcoin look cheaper.
Or ETF news. Or renewed Bitcoin ETF inflows, absolutely. Any of those could provide the spark needed to push through those upper resistance levels we talked about.
Okay, so let's try and distill this. Bringing all these pieces together, the history, the whales, the levels, the macro. What's the summary outlook for you for September?
Look, I think you should probably expect continued consolidation and quite a bit of volatility for much of the month. That $100,000 to $104,000 zone, the consensus is it's likely to act as a major floor.
Okay, so the downside might be limited around there?
We think so. Rebounds back towards maybe $111,000 to $115,000 seem pretty likely if sentiment just stabilizes a bit.
And what would signal things are really turning bullish again?
A solid move, a rally above $117,000, maybe towards $120,000. That would definitely signal returning bullish momentum. And, $125,000 isn't totally off the table if we get strong macro news or those whales just keep buying consistently.
But the caution flag is still up.
But yeah, you have to remember that historical seasonality. It still favors being a bit cautious, maybe more defensive in your positioning for September overall.
Right. So we've covered a lot there. Bitcoin's path for September, balancing that whole red September history against some really interesting current signals, like the whale buying.
Yeah, and that actually brings up, I think, an important question for you, the listener. When you see this kind of contrast, this historical pattern saying one thing, but the smart money may be doing another, how do you think about balancing your own long-term belief in Bitcoin, your conviction, with these kinds of tactical short-term market moves and signals?
Something definitely worth thinking about. Consider these insights as you plan your own next steps in what is undoubtedly a dynamic market.